Hey, good afternoon, guys. We're gonna start shortly. I'm just setting up the stream, and then we'll begin in about 1 minute. Yep. So if you guys can't see the display or you can't hear me well, feel free to just put it in the chat so that I can rectify that issue. Else I'll just start off with the introduction, and then as more people come in, I'll walk through how we're gonna carry out this webinar. Yeah. Right. So very good afternoon to everyone. Today's session is a 30-minute session, and we are going to go through a new symbol that we have not done in the past, dollar yen. And my name is Sherman, and I'm an FX strategist. And this webinar is in collaboration with Vantage. Right. So my background is in algorithmic trading, and so a lot of the concepts that we'll be going through today will be very systematic in nature. So if you have any questions on the methodologies, or you have any queries on how you can better understand some of these systematic approaches, feel free to drop me a message on my LinkedIn, and I'll get back to you as soon as possible. And so before we begin, I just want to make sure that I put this disclaimer out, that any form of trading involves a certain amount of risk. Do ensure that you are well aware of the risk that you're going to take when you follow any of the signals given today, and make sure that you understand the risk before you make any trading decisions. Okay, so for those of you who are joining for the first time, I'm just going to go through a very quick overview of what I'm using here instead of on the charts. So I'll be using only one indicator, which is the pivot lines. And I'll just briefly go through what pivot lines are. So on TradingView or any platform they're using, be it like MT4 or some of these web trader platforms offered by the brokers, right? There is this indicator called the pivot lines, and the pivot lines are basically levels that are projected based on the previous periods, 4 data points: the open, high, low, and close. So the good thing about this indicator is that it's non-repainting. So what it means is that as prices move, right, the pivot lines for that period will not change, right? As compared to some indicators where, as prices move, your signals will change. So once the period ends, right, the pivot lines will be drawn and they are final. Okay. So what we're interested in is 9 lines. The most important line is the pivot line. It's right in the middle, and right above the pivot line, there'll be 2 lines: resistance 1 and resistance 2, and below it will be support 1 and support 2, right? And just for the sake of measurement, the lines in between the major lines are called the middle lines. So you see M1 between S1 and S2, M2 between pivot and S1, or you see M3 and M4 between this major resistance line. Okay, the rule of thumb for understanding the pivots is that prices only exist in 2 areas. One, it's between S2 and R2, and we can term that as a normal price. The price is within a normal range. And so whenever prices are within S2 and R2, right, there are some predicted or some projected target prices that we can actually follow. The other scenario is when price breaks above R2, which gives us a bullish trend, and if it breaks below S2, and it signifies a bearish trend. Okay, so once price breaks below, say for example, S2, and it closes below S2, right? From this period onwards, we will just be looking at sells until price breaks above a new R2, and that's where we'll change the narrative. Okay, so if price breaks below S2 and closes below S2, we're only looking for sells. If price closes above R2, then we'll be looking for buys. Okay. So two other key areas would be between M3 and the pivot line, and the pivot line and M2. Okay. At the start of each period, the M2 to the pivot line area usually dictates a potential M4 target. So if price were to start in this area and we are in a bullish trend, right, then we'll probably see prices end up at M4. And if it's in a bearish trend and it start off in M3, M3 will be the perfect place for us to actually sell, and the target will be M1 to S2. Okay, so there's these 3 points. If you have any questions along the way, we will just talk about it on TradingView. Okay, so I'm just going to change my screen now to TradingView so that we can look at what's the setup for the upcoming session. Right, so just looking at TradingView, share here. I'm just going to switch my screen on the stream as well. Okay. Right, no questions? Yep. Okay, cool. So ideally what we'll be looking at today would be dollar yen. Okay, so why dollar yen is a very unique piece of instrument is because of some of the fundamentals between these two pairs. So dollar being a major pair, right? So anything with dollar, it's a major pair, and dollar is basically the reserve currency of the world. So many countries, many sovereign countries actually hold US dollar due to the stability and what's backing the US dollar, which is basically the US military, the US government, and of course a lot of the other commodities that are traded in US dollar, mainly oil, right? So the unique thing about dollar yen is that out of all the dollar pairs, right, dollar yen, out of the G10 currencies, dollar yen, right, has the biggest swap ratio, which means to say that if you were to hold dollar and sell yen, right, your overnight swaps will be positive. But if you were to hold yen and sell dollar, then your overnight swaps will be extremely negative. So it's very expensive to hold yen while selling the dollar. Okay, so given that fundamental knowledge, right, if it's very expensive to hold yen, then naturally prices will tend to move in the direction of the currency with the highest interest rate. Okay, so yen is currently at negative 0.5, 50 basis points for their overnight interest rates, whereas the dollar is at 5.75%, right? So just by holding dollar and selling yen, you will just incur profits through the swaps. Okay, so what happened recently? I'm not going to go into the technicals first because I think for dollar yen, it's important to actually talk about the fundamentals. The key thing about dollar yen is that the Bank of Japan has been wanting to control the rates of dollar yen. And why is this so? Because as yen depreciates against the dollar, it gets more expensive for the Japanese to purchase goods and services, which means their imports will be more expensive, right? Whereas their exports will be cheaper, and hence you will see this outflow, people wanting to sell the yen and buying any other currencies other than the yen. Okay, so a lot of them, what people will do is people will borrow yen, right? Go to Bank of Japan, go to Japanese banks, borrow the yen, and then sell it in the market to, say, to hold US dollar. And just by doing so, you have already earned a profit through holding this exchange. Okay, so for dollar yen, you will see a lot of this kind of spikes where this are probably intervention by the central banks. Okay. So let's get into the technicals now. So just purely on fundamentals, we already have a very strong narrative for dollar yen strength. Okay. Dollar yen strength, it's up. And can we couple that up with the technicals, right? So what we're looking for on the weekly. So this is again just a quick introduction on the indicators that I'm using, right? If you go under indicators, click on type in pivot lines, you get a range, you get a series of indicators that you can use. The one I'm using is called Wayne's pivot. And I'm using this because it highlights the target area and it'll be easier for us to actually look at our target prices. Okay. So click on Wayne's pivot. And once you have that on your chart, click on this settings cog, right? And under the second settings, under time frame, you can select the time frame or the period that you're interested in. Okay. So as a rule of thumb, right, we usually go from the higher time frame, monthly, weekly, and then we go to the daily, and then 4 hours and the hour. Okay. Anything below the hour, it's going to be noise, and it's very hard for us to actually treat that unless you are scripting your algorithm and you have a script that is running for you. Okay. Otherwise, if you're a swing trader, and if you're gonna do swing sessions for London and New York, we're gonna stick with these 4 time frames. Okay. So alternatively, you can just copy and paste it on the same chart. So I have a weekly, daily, 4 hours, and a 60 minutes. Okay. Yep. So I think there's someone asked if we can actually use pivots and merge that with concepts of ICT. ICT is the inner circle trader, or SMC, which is smart money concepts. And I can demonstrate how we can actually use the pivot lines to determine order blocks and areas of point of interest. Okay. So back to the point, as I mentioned, prices will fall either within R2 and S2 or beyond this range, right? So if you look at the time period from here all the way back, right, all of the prices are falling and they're closing within the range. So R2 and S2 prices are closing within this range, closing within this range. And at times prices may pop out of that range, but it'll fall back in, which what we are more concerned of is when prices close that period, right? So if this is the weekly pivots, will prices close within R2 and S2 or close above, right? So we can see past few weeks, everything has been in accordance, and this is largely due to how controlled this pair is, right? And the only one that we can actually see is at this period in July, right, where prices broke below S2, right? And after it closes below S2, right, it closes below S2, this becomes the resistance, okay? Right, and you can see that prices, once it first tap into this resistance, there's a rejection, and then basically there is a bunch of market orders that pushes price above. So what we usually do is that whenever prices break below, right, this will become a support turn resistance area. Okay, and prices can, as many times as needed, right, break above, break below, break above, break below. But whenever it breaks above and closes above, this area will become a support, and if it breaks below, it becomes a resistance. Okay, so this was the only time on the weekly pivot that we can see prices react around this area, and once it breaks above, then we are basically in a bullish narrative. Okay, so in what scenario would we be in a bearish narrative? Okay, so the concept, we have to keep it consistent. So anytime prices breaks below M1 and S2, that area will be our change of character, and then we'll be looking for a sell. Okay, so do take note also, in an uptrend, right? Prices tend to hit the target easily. M4 to R2 is the target. And for the R2, okay, we have a range around this area. And then M4 to R2. And then today, this week, we are on M4 to R2 as well. Okay, so for the dollar yen, we are extremely bullish. Okay, so in fact, there isn't much that we can actually do with dollar yen this week, right? This was the entry. So as we were in the bullish territory, that means prices breaks above the M2 to M3 range, right? Our target entry is M2 to pivot, right? If you remember when I was going through the slides, pivot M2, this is the entry, and our target would have been R2 and 4 for this week. So we have already hit the target. And usually what happens when we hit the target early would be something like that, right? We will tend to go back to the pivot, right? And if we were to go back to the pivot, it will start off M2 next week, and then we'll look for a higher high. Okay, this is one case. The other scenario is for it to bounce up here. Now that it has come down to this M4, the tendency would be for prices to break above R2. And what happens would be that the following week, we'll start off the week on the M3. Again, these lines are projected, so these are not final, whereas the lines for this week are final. Okay, so as price moves up, all of our pivot lines for next week will move up as well. So if we end off the week at the highest point, then we will be on the M3. Okay, same for this. If the week ends around the highest point, right, we'll start off around M3. So M3 will be somewhere around here. We'll bounce back down to the pivot, and then we'll buy up again. So there's nothing much that you can actually do with dollar yen this week, right? Because we already hit the target. The only time that we can actually move out, start a trade again, would be for prices to close above, break into this level again, and then we buy up. Okay, but just for the sake of education and going through the pivot lines, I can briefly talk about how we can use the pivot lines as an SMC concept. Okay. So right off the bat, you do not need kind of second guess where the point of interest is, right? We already defined the point of interest in this area for this week. Okay. So if you drag it across on the weekly, you would have somewhat of a point of interest in this. And how do we know if again, this is a week, so we're gonna ignore any weeks. We'll be basically looking at the closing prices, right? And if we were to look at this area here, right, this was coming down. What we can do is we can put in a small time frame pivot. So just this is the weekly zone. So I'm just gonna state this area here as the weekly zone. Okay, this is weekly. So I'm gonna cross here again. Okay. Right. So the start of the week, which is here, Thursday, Friday, and then Monday. This was the start of the week. Okay. So the idea for the start of the week was that we wanted to get it up here. Okay. But once we will enter once here, and then M3, because M3 has been broken, this will be the next entry. Okay. So Monday we will have been stopped out. This was the target, but we will have been stopped out. Okay. So the first day this week, right? Prices closed below M2. So once it closed below M2, we'll be looking for a sell. Okay. Again, remember this is our weekly entry zone. So we need price. We need to make our way down into the weekly point of interest before we start looking for buys. Okay. So what happened on Tuesday was that if you look at M1S2, right? This would have been the target area for sellers. Okay. So what I mean by that is that once we are here, what we are looking for is an entry up to M2, and the target would be this. Okay. This is if you're aggressive, you want to take a sell, this would have been a 50 pip move. Okay. So once this is completed, we are in this area. What we are looking for is a rejection of this area. Okay. And clearly, this was the first rejection. If I zoom in, yeah. Right. This was the first rejection. So as price move up, right, came back down, and then it made a higher high. This would have been where we have entered. Okay. But of course, this is very aggressive, right? What you would want to see is look for the V-shaped recovery. So this is the V-shaped recovery, right? So unless prices reach into this area, anything below this will be a very aggressive entry. Okay. So from pivot, we hit into our target zone, we push back up. Once it breaks above the pivot line, this will become our area of entry. Okay, so this is our first area of entry. And this again would be our breaker block. Okay. So once we break above, limit order set in place, and then we would have moved up. And once this has been created, there might be multiple retests of this area. But what we have identified is the next day on Wednesday, this was our resistance, right? It has been tapped once, break below. Now this is the second one that we are looking at. Okay, so on Wednesday we were in a range. Okay, and the key thing about a range, what's the key thing about a range? Okay, the key thing about a range is that it has to tap both areas, and whenever it fails to reach the other area, the tendency is for it to hit down. Okay, so this is one scenario, and the other scenario that played out, because we are bullish, right? So once it hit this area, we are looking for it to retap into this area, but it did not. It came back down, push it up, and once we see this pattern where it did not hit the lower bound of that range, right? We can start buying in this area. Okay, and once it breaks out, you have this opportunity to actually buy it here, and then the target would have been M4. Okay, so same thing, because it ended above, we are on the weekly bullish zone. This would have been our entry. See, M2 to pivot again, this would have been our entry, right? And then break into this range again, and then we're moving up. Okay, so this would have been the second range, but now because the target has reached, we have already reached this area. We have reached this area. Okay, what we want to see is for price to come back down to the pivot. Okay, and move up. Okay, in the event that prices breaks below the pivot into this zone, then we'll be looking at a retrace back to the pivot, and then bearish for today. Okay, but given that tonight there'll be some news event, right? And we are still in the bullish momentum, right? The idea would be that the next buy entry needs to break above this zone here. Okay. And what is this zone? This zone is the weekly target zone. Okay, weekly target zone. And if we do break the weekly target zone, then we are bullish. Okay. Okay, your first entry would have been at a pivot. If you miss this entry, you can re-enter again at a pivot with the stop loss below M2. But ideally, what we want to see is this. Okay. For price to come down, up, retest 150.65, and then we move up again. Okay, this is a bullish momentum. Okay, so this is the most conservative buy. This would be an aggressive buy. Okay, if you're going to wait for price to come down, make sure that it forms a higher high, higher low before you start buying. Okay, it has to reject. Okay, do not enter at this stage because the target has already been reached. Okay, and in fact, if you want to put in the monthly, we can see if we have already reached the target for the monthly. Monthly, we can go up to the 4 hours, and then we see where we are on the monthly. Oh, we are not. So the monthly, next Tuesday is the end of the month. Okay, so as mentioned, on the monthly, this was the entry for the month. See, this is the start of October. We are on a bullish trend, ended off at M4 target last month. So the entry would be 147.34, and the target would be here. Okay. So we are not at our monthly target. We have another 4 more trading days to go, which will bring us another 200 pips. Okay, so there's a lot of room to grow for your buys. So yeah, unless we see a reversal, right? Again, how do we determine the reversal? Okay, by the end of this week. Okay, let's talk about daily first. Okay. This is a scenario where our monthly buy target will be missed. Okay, so if you put in the daily pivots, you can see M1 and S2. Okay, once price breaks below S2 for today, closes below S2, right? Then we'll be looking for sells. If you look at the weekly, so once it breaks the daily, the target will be the weekly target. Okay. And if it continues to go down by the end of the week, then we'll be looking to target this entry zone again. Okay. This is a 300 pip move down, 220 pip move down, and you have a 200 pip move up to the target. Okay. So as you do analysis, we'll start from usually when you do the analysis for the overarching trend, we start from the higher time frame, the weekly to the daily, to the 4 hours to the hourly. And when you look for the alternative, you need to find areas where you need to break on the 4 hours, which leads to the break in the daily, which then leads to the break in the weekly. And then it confirms your alternative narrative. Okay. So essentially trading is just 2 directions, buy and sell. You just need to identify levels. That's all. Right. So do not buy anywhere from here. So if it's not highlighted, do not buy. You only buy in areas where it's point of interest. Okay. Otherwise, you'll just be chasing prices, and then you'll never be able to close off in profits. Okay. Do ensure to put stop losses below this area. If your point of interest fails, right, then the alternative plan will be correct. Okay, so if you're buying here, and stop loss is below, your first target will be, again, the most recent high. But once this has been broken, right, the alternative would be true, right? And you'll be targeting the daily target here. Okay. So only enter in positions where you know that if you're wrong, the alternative would be the right direction. Okay. So yeah, that's all for today. This is dollar yen. We'll be watching gold as well. Yep. So tomorrow's session we'll be talking a little bit more on the other pairs, but gold will be something of interest, right? And we're still on target. We're still moving in the right direction. We have not broken any support zones yet. So yep, we'll go through gold tomorrow. And then this would be our plan for dollar yen, which is a buy at 150.03. Okay. Okay, that's all for today. Thank you guys for coming. If you have any questions, feel free to drop those questions on my LinkedIn, or you can follow up in the following session. Tomorrow we'll review this setup again, just to make sure that the concepts that we have gone through are consistent and that it works for all instruments in all market conditions. Okay. All right. Thank you guys. See you again.